organized together with SMEs, the Italian Association of Listed Companies, under the broad theme of SMEs financing in times of COVID. The first webinar of the series took place in July, focused on equity financing. Today, the focus is on the bond market, and the third and last webinar will examine the EU institutional and regulatory framework for SMEs. Today, corporate bond markets, one of the important segments of European capital markets. They can provide a vital alternative financing source for SMEs, mini bonds, mid-cap bonds, private placement. However, the market is not developed at its full potential. There are still some complexities in terms of requirements, listing rules, prospectus, and so on. Harmonization is also something that is missing. The market is fragmented along national borders. CMU financing is one of the main focus of the CMU action plan, of the new CMU action plan. However, the focus is more on the equity financing and less to the bond debt financing. But that's why we are here together with four excellent speakers to discuss these issues. We have together with us Agnès Letieg, Policy Officer from DG FISMA, the European Commission. We have Maurizio Pastore, Head of Debt at Euronext Dublin, Andrea Rismara, CEO of Equita, and Florence Vasilescu, CEO of Firm Funding. But before passing the floor to them, I would like to remind to the audience, to the people that they are joining now, to use the Q&A button at the bottom of the Zoom screen to post their questions. I'll make sure that I collect them and I'll ask them to the panelists. But also, in order to warm up a bit, I would like to ask a question to the audience. So I would like to ask my colleague Bea to display the question. It's, as the name of the webinar suggests, how the corporate bond market for SMEs can take off by simplifying listing procedures and the prospectus, also the market abuse, although last year a regulation amending MRI, MAR and prospectus was put in place in order to ease access to finance and make the SME growth market more attractive. Some argue that further simplification is needed. Harmonizing the regulatory framework, which is very heterogeneous across member states, by incentivizing issuers to come to the market and investors to invest on these SMEs. Definition of SMEs. Do we need a clear definition? This is a topic discussed over the last years, also in a consistent way across different regulatory pieces, providing greater transparency on pricing in secondary markets. This is also related to the recent quick fix MiFID, but also by, let's say, establishing SME ratings, although there are few of them focusing on SMEs, and also by establishing more broad research coverage for SMEs. So these are the options. We would like to ask the people at the audience to select one of them, and I'll make sure that I follow up and I'll bring to the discussion the results at some point later during the webinar. But before, with no further delay, actually, I would like to pass the floor to Agnès. Agnès, coming from the Commission, it is important, I think, if you can give us a bit of an overview of what has been done, what has been achieved over the last years, but also moving forward, what we have to do, what still remains to be done. Please, Agnès.
Thank you very much, Apostolos, and good afternoon to everybody. So I'm very happy to be here about this important subject of corporate bonds. So I'll explain quickly why, in our view, in the view of the Commission, the corporate bonds have been very important from a CMU perspective. And indeed, I will explain what we have done so far and what we are intending to do. So first, we see corporate bonds indeed as very important. What the figures show is that there have been the amount of issuance of corporate bonds having growing a lot over the last decade. I think there have been more than doubling. My last figure shows that in the first half of 2020, they increased by 58% compared to the first half of 2019. We also know that this is driven by low interest rate, also by the corporate sector purchase program by the ECB. And so the question is whether this very positive trend is sustainable when this economic environment changes. So at the same time, we do know that even so the amount of issuances has been growing, there is still a lot of potential for these corporate bond markets to develop, we believe. Why? Because they only represent about 4% of the non-financial corporations' liabilities, of the total of their liabilities, when in the US, I think it's about 11%. Also because the corporate bond market in Europe, and you said it, Apostolos already, is very much fragmented along national lines. So in a couple of member states, France and Netherlands, notably, it's very developed, and in others, and I think Spain and Italy, it's not too bad, but in other markets, it's really very, very little. So we believe that there is a lot of potential there. That would provide additional financing for SMEs, so diversifying their risk from relying too much on bank funding. And we also know that with this new COVID crisis, the banks have been resisting very well so far compared to the 2008 crisis. Also, thanks to the measures that we introduced after the 2008 crisis, but we don't know if this is going to last. We know that this crisis is going to COVID crisis is going to last long. We have all the lockdown measures that are arriving right now in Europe, which are going to make it an even bigger crisis than it already was. So we don't know how long the banks will come under pressure to lend, because the companies will need money, and they will also come under pressure because it is very possible that the amount of non-performing loans on their balance sheet is going to grow. That's likely. We don't hope so, but it's a possibility. So therefore, from the beginning, we considered corporate bonds very important. So what we have done, because we were hearing a lot that there were problems of liquidity on the corporate bond markets in Europe. So we did two things to find out more, and also to get some recommendation from the private sector about what to do about it. First, we did a quantitative study on the drivers of corporate bonds liquidity, and which showed that the picture was a big mix. I won't go into the detail. Everything is on our website, and you will, those interesting will find it. That overall there is a deterioration of liquidity, with two important findings. Only I would say that it looks like the corporate bonds are liquid at the time of issuance, but then quickly they get siloed in the portfolios of long-term investors, and then liquidity becomes very, very low. So the second thing we did is that we launched an expert group on the functioning of corporate bond markets. There were 17 practitioners, and they published a report at the end of 2017 with 22 recommendations. And several of these recommendations we've been implementing since. And I will just name a few without going into the details, because we don't have so much time. But the first one was to simplify the prospectus for SMEs. the content of the prospectus first, which was streamlined through a delegated act, and then to allow issuers with at least 3 years of listing on an SME growth market to produce a lighter prospectus. Another thing we did following on the recommendation from this expert group was to alleviate the requirements on market sounding in the Market Abuse Directive. Several other recommendations which we followed was the adoption of the proposal for the pan-European pension product, which was adopted by the co-legislators since. We also adopted a proposal for a directive and a regulation on the cross-border of marketing of funds. And we also have been supporting national markets to develop national capital markets, national authorities to develop the national capital markets, which are standing behind by providing funding to several of them through the SRSet at the time, which is now DG reform, to develop a strategy to develop their own capital markets, to enhance their supervision, for example. And these are things which are maybe not directly, but indirectly, potentially helping corporate bonds. Other things we have been and are going to do in the short-term future, which were also recommendations from the expert group on corporate bond markets, is on CSDR, an issue, a subject that is that has been very much debated, is the settlement discipline regime under CSDR, which its implementation and the mandatory buy-ins, which some argue has an impact on makes it more difficult for liquidity providers to provide liquidity on corporate bond markets. So we've been delaying its implementation until February 2022 now, which I think will make it at the end a total of 2 years or something like that. And another thing we are doing also in part as part on the CSDR is to assess the settlement discipline regime, and because we think it's relevant with Brexit, which is a major change on EU capital markets, obviously, and also as a result of the COVID crisis. So we will publish a report to the Council, provide a report to the Council and the Parliament on this by the end of the year, and possibly make a legislative proposal by the end of 2021 as part of the CSDR review. Apostolos, you rightly mentioned that in the new CMU action plan, we don't have an action that is dedicated per se on consolidated bonds. There are several actions will directly or indirectly benefit, we hope, consolidated bonds. So, for example, the listing rules for public markets, SME growth market and regulated markets should, the simplification of this should help, we think, corporate bonds. Also, the market abuse regime. And there was also this on consolidated tape. For the moment, we are looking only, at least in the CMU action plan, at equity and equity-light instrument. This is a first step. It doesn't exclude corporate bonds, but obviously, given the liquidity on equity markets compared to the liquidity on corporate bond markets, it's easier to start with equity and equity-like instruments. It doesn't exclude corporate bonds, and it's a first step. I also would like to say that on the private placement, we have done also a study on the private placement markets, which is growing, and this is very positive for European companies. And there we published several recommendations to the member states, because lots of possibilities are actually, things can be done by member states on this in 2019. I will finish this because I think I am over my time already. Thank you very much. And maybe a final word. I really look forward to this discussion and the presentation by the other speakers, because as I said at the beginning, we think that corporate bonds market have the potential to grow in Europe, and if there are ideas which we are missing, we would be more than willing to explore them. Thank you very much.
Thanks a lot, Agnes, for this overview. You put very nicely what done. And also how to move forward on that. I keep that most of it, or most of the things, will somehow indirectly affect the corporate bond market and will not have a direct effect, or there is not something directly addressed to the corporate bond market for SMEs. But with this, I would like to pass to Mauricio. Mauricio, coming on your side as an exchange, you have also the overview of what's going on in the other markets, and not only Dublin as part of Euronext, for example. So it's important to give us a bit of an overview of how the market has developed over the last years across different countries. Of course, since the beginning of the year, what is the impact of COVID? Is there any significant impact on the bond market based from the pandemic? And moving forward, what is the role? What should be done from exchanges? What is the role of exchanges to ease access to capital markets for SMEs?
Sure. Thank you very much, Apostolos, and I'm delighted to be here with you today, and thanks to ECMI and Marcello Bianchi from Assonime for this kind invitation. Obviously, the question on how the bond market for SMEs can take off is now more important than ever, considering the difficulties small and medium companies are facing in this crisis. We are going through a difficult economic phase, and nobody is immune in these challenging times. But also, we have to recognize, and this is my personal experience, but also talking to market operators, how resilient the capital market has been in this year. With some glitches here and there, we are all working from home, with different approaches in different countries, but still, it is true that we are facing this enormous tragedy, difficulty time in terms of the COVID, in a very, I would say again, resilient way. The central banks have acted this time very, very quickly. EU has intervened with a substantial recovery package. We have seen already the SURE instrument has been used last week, has been very successfully received. And this is all important for SMEs, of course. Now, of course, also in the context of the new action plan, which in my personal opinion is very important and goes in the right direction. We still have a lot to go. I mean, the road ahead is bumpy. There are so many different approaches within the different countries within the EU. Now, coming from an exchange perspective, Euronext is a pan-European exchange with markets that goes from Lisbon to Paris, Brussels, Oslo, Amsterdam, Dublin, and soon also the Italian one. So we have a kind of privileged position to see what's going on in the bond market, and considering that also our exchange is the leader in terms of listing, with close to 50,000 bonds listed in our market from more than 4,000 issuers coming from 90 jurisdictions in the world, but the majority, of course, in Europe. Agnes mentioned the success, for example, of the mini bonds within the Italian and the Spanish market, which we have also noted, and is an example of policymakers that do the right thing, that they go into the market with the right policy legislation and allow a development of the market. Of course, those are also countries where the industrial backbone of the country is made of SMEs. Now you see what is happening, for example, in the Anglo-Saxon world. and the FSC announced back in June that they proposed to make a permanent ban on the mass marketing of speculative illiquid securities issued by mini bonds. Basically, this ban is called the ban towards mini bonds. So you can see how different the approach within the same bloc is. I mean, UK soon will leave the bloc, but this is true. And you mentioned the fragmentation of this market. We don't even know, we don't even have a clear definition of what SMEs are within the EU, or there are several definitions. What is an SMEs in Italy definitely is different from what it is in Denmark. Now, from an exchange point of view, just to give you an indication of bonds that have listed with us, with a size that goes from 0 to 50 million, we had in the last 2 years 159 bonds, from 50 to 182. So in total, we will have 241 bonds that have gone to the market through a listing, so a public offer and so on. Now, the total bond listed in these two years have been close to 2,000. So basically, the standalone SMEs represent roughly 13% of the issuances. And this is in line with what is happening in the European market, which is, as we know, and that's also why the Commission is pushing again with this action plan, for this CMU action plan, is to counterbalance again, the banking market, which is, we know it, dominant, and we have to help the European capital market grow, and maybe mirroring what is happening in the States. It's a very complex topic. It's not only linked to legislation, policy makers, and so on. It's linked to also culture, risk-taking, for example, or financial literacy. There are so many elements there that work, that are crucial for making the European capital market flourishing. All the questions that you mentioned in your survey, in my opinion, are really relevant. Something that I've noticed is the importance of, again, the legislation. In 2005, we had the first prospectus directive. We have done amazingly well in that field, in the ground, with that subsequent modification of that piece of legislation, with the regulation, subsequent regulation. I've experienced within the exchange how having a clear European legislative framework helps investors and also issuers accessing the capital market. But there is so much more that needs to be done. For example, the market abuse regulation, when it was introduced, and Agnes, I have to be honest, I was very critical of the approach that the Commission took at that time, because there was let's say, a blanket that was thrown to regulate the market, unregulated market, MTF, without differentiation of, let's say, corporate bonds issued by multinational entities or SMEs at that time. The same legislation was applied with a filter that probably was just, the spectrum was more an equity approach than the bond approach, was applied to SPVs, where clearly, the capacity to do market manipulation is, let's say, limited, and the responsibility of the structure is completely different. And that I experienced almost 40 bonds that left at that time the Irish Stock Exchange, now within the Euronext group, to go to Singapore. So basically, on one hand, we were just pushing with the CMU and say we have to work towards a better, viable, economic, also capital market in Europe. On the other hand, we were just, increasing the cost of compliancy. And this was across the board. Now, we all recognize the improvements there, and the goodwill, and also the intention of the Commission to remedy to that approach, initial approach, still there is so much to do. Again, if you ask issuers, they will say, and this is our corporates that are issuing maybe 500, 400, 500 million bonds, they still perceive the market abuse as cumbersome. Imagine what will be the opinion of small, entities that are issuing maybe 30, 40 million, or for the first time access the capital market. Now I'm in favor, and just the MAR was not, going into a vacuum. It was already, there was already rules also for issuers that were listed in the MTFs for market abuse, the Market Abuse Directive and so on. So it's a combination of different elements, definitely helping also investors and issuers with the right tax incentive is crucial objective from my point of view. The definition of SMEs within the European environment needs to be closer defined, and also allowing more transparency. And that's what probably an exchange is trying to do, to provide markets that are providing more transparency, providing more visibility to small companies. A perfect example is what Borsa Italiana with Extra Mod did, has been incredibly successful with mini bonds. Same thing with the Spanish Borsa Española with the MARF, and we have seen an amazing increase of small companies accessing the capital market when the cost of accessing the capital market was reduced, and there was more visibility for investors to access these platforms. Now, crucially, in my view, is what we have here in the panel, arranging institutions such as Equita have done an amazing job in terms of supporting the access of small entities to the capital market and make it in contact with the right investors. Likewise for Florence, very brave and absolutely needed in the creation of funds or platforms that can help investing in this market. And I've seen it, from my colleagues in Lisbon. What they are lamenting is actually a missing of an arranger, for example, for small entities. They are doing the job of holding the hands of companies to go to the capital market, but not necessarily in the bond market is not, is very time consuming, and it's not necessarily our job, while the arranger is crucial in that role. And that was my approach, my suggestions. Look, more arranger, more mid-size entity that understand well the market, with maybe also entities that can provide a rating for these SMEs that definitely help transparency, the visibility of these companies when they access a listing venue. Private placement, also another very important element, is growing fast, but we have to make sure that the right information is there, because Agnes is right. There is liquidity when they access the first time in the market, it's just one investor, but then what happens if there is a crisis? And the investor that initially said, I'm very comfortable with this bond, with this paper, but then if they want to liquidate the position for whatever reason, maybe at a discount, they may not find the right liquidity out there, and then the distribution. So we have seen the proliferation of small MTFs that they don't really care about transparency. They say that, you come to us and we'll list your bond, is going to be done very quickly. That's definitely, from my point of view, not very healthy, and they will lack transparency, and is not exactly where we should go.
Good. Thanks a lot, Mauricio. I mean, you mentioned, it's good that you mentioned also some data in the discussion. So to highlight, 13% of the bond issuances in Euronext are SMEs.
Exactly. In the last 2 years. Now, look, with the COVID, you mentioned, we have seen blue chips in particular in the second quarter accessing more the capital market, especially from the continent side. with massive jumbo issuances. I mean, you know, the interest rate are at historical low. It's basically just an incentive for them. There are so many investors with the right liquidity because of the monetary policies that I mentioned before. So it is working. Are the SMEs, you know, Agnes mentioned 48% of the increase, but we have to see how really big in 2019 that pool of SMEs was. And I'm reluctant maybe to think that this is you know, just a great pool of in terms of numbers of entities. I mean, again, the 58% increase is definitely very good and very strong, and we all support that increase. But are SMEs again taking advantage of the market, or are they struggling now? You know, is the real cost of accessing the capital market viable everywhere in our jurisdiction, or maybe Italy and Spain can teach us something about that and make this market a little bit more just competitive in terms of cost. Definitely the structure that are true and work for conventional bonds don't work for SMEs. You know, we need specialized market operators. And then, you know, probably, and we will talk later on, maybe the technology in this field will definitely help. I mean, we have seen so many platforms that are now helping the build up of the bonds through, let's say, EPPF, or there are so many, WeTac or Nivaura and so on, Origins, so that they definitely will help, you know, entities to go to the market faster in a more competitive way in terms of cost. Legislators have a great impact and influence in that area.
Mauricio, I guess you are referring more to mid-caps. These SMEs that we are talking about are the majority of the mid-caps.
For the moment, again, who is taking advantage of the great, let's say, interest rate and the facilities that are out there normally are, you know, mid-caps or large corporates. To be honest, to be fair, SMEs, and that's why this discussion, from my point of view, is very, very important and punctual. There is a need of incentivizing issuers and investors, from my point of view, definitely with the right tax incentive, and also with the support of the right legislative framework, which should not be, let's say, burdensome or more cost intensive. See what happens with MiFID II. You know, we were all in favor of more transparency on the pricing of the secondary market. For exchanging, what that means is more filing with ESMA, filing with coding, and so on. If you ask again the market, they will be very critical. They will say this only increased the cost for me and not provided better pricing or exchange traded prices. You know, the reality is that a lot of this paper is traded the OTC, and there is so much to do in that space.
Good, perfect. Thanks a lot. You're giving a good pass to move to Andrea. Andrea, coming from Equita, an independent private investment bank, you see both, let's say, issuers and investors. So what are the main impediments? What are the main obstacles that they're facing?
Thank you, Apostolo. So good afternoon to everybody. But my perspective is obviously as an investment bank, as you mentioned, Apostolos, and then we are a listed company. So we are also a potential issuer, and I see both angles. And if I take a step back, I totally agree that there is a problem with capital markets in general for SMEs or mid-market or whatever we want to call them. Huge problem. I think there's much more that needs to be done, even than what is included in the capital market action plan that I have seen. And yes, there is huge potential growth in the corporate bond market for SMEs. But in order to have a well-functioning market, and I may state something that sounds obvious to everybody, but we need, certainly we need a good set of rules, and I'll come to it in a sec, but first of all, we need issuers, investors, and brokers. Set of rules. I think a lot was done by the European Commission. There's still things that defy my logic. As an issuer, if I issue bond, I'm on a regulated market. I don't see why I have to file a new prospectus, which entails lawyers, reviewing process from regulators. I have to be transparent because of all the rules that have been added gradually by all the regulators. So why is it that if I issue a bond, I have to file a huge prospectus with my regulator? That I don't understand. And the same applies to rights issues. And I think that needs to be addressed effectively. If that was addressed effectively, then there will be also a bit more motivation for people to be listed, because otherwise people don't see a point if they have to file a prospectus over and over whenever they go back to the market. Secondly, there's still very high differences between the way that local regulators manage the same set of rules. So these rules should be harmonized, should be made mandatory, and it should be impossible for issuers to have regulatory arbitrages depending on whether they file here or there. There are still huge regulatory arbitrages in Europe, which we as an advisor use very happily and advise companies and our clients to use. But the reality is that this should be simplified for everybody, and that those regulatory arbitrages should be taken out. And thirdly, coming to the rules, again, the definition of SMEs must be changed quickly and once and for all. I don't know why it is taking so long. The definition is SMEs is also something that affects whether state aid regulations kick in or not. The current definition of SMEs does not apply in the capital markets. It is totally irrelevant. The companies that are defined as SMEs according to EC regulations normally do not go to capital markets because they're too small. So there needs to be another definition, and it has to be clear that for local governments incentivize their companies, their investors, for anybody who invests or issues below a certain threshold should not fall within the state aid rules. I mentioned that because we tried in Italy a couple of times to do that, and it was quickly bounced by the European Commission. We tried to have favorable tax incentives for companies going listed. It was quickly bounced, and we tried to have favorable tax incentives for people investing in LTIFs, and it did not work. So we had to find other regulations. So this is something that the European Commission really needs to get their acts together on. But I go back to my three columns for a market to exist. Issuers. Now, good issuers, because obviously capital markets, corporate bond markets need to be for good issuers, not for people in trouble. Well, those issuers today get their money for free. So what is their incentive to go to the capital markets? There needs to be some tax incentive, regulatory incentive for people to access the capital markets, because we think this is good for the system. If somebody, instead of going to their bank, getting money for 2 years, takes the trouble of filing a prospectus and have money for 6 years, that should be incentivized. It should be some tax break, some tax credit, whatever, and local governments should be able to incentivize that. Also, if we want those companies to be transparent, I don't think prospectus works. To be honest, I think it is more a matter of having some simple ratings or research to be published on them. If a company issues a bond and is not a listed company, you want somebody externally to look at their numbers and tell you what they think about that company. So research should be mandatory for anybody issuing a bond, and that is way more useful than a prospectus that nobody reads, to be honest with you, particularly in the case of listed companies trying to issue bond. I was considering it my company to issue a bond, and then it just was not worth it, because in my case, we wouldn't be needing more than 40 million. 40 million obviously is way below the size of any bond market in Italy, so we went to the bank. And it's a shame, because probably there will be a lot of interested investors that would be willing to buy paper by a profitable, reputable listed company, but that opportunity is taken away from them because the rules are very asymmetrical compared to the ability for companies to access bank financing. So companies, I said, number one, need to be incentivized. Second point is investors. Because the inherent, because of the small size of corporate bonds by SMEs, obviously there's an issue of liquidity. So all of the conventional investors who invest in corporate bonds are out of the, of the picture, because they normally look for only large sizes. You know that for an investment grade company, the threshold tends to be $500 million. For a high yield company, the investment, the threshold tends to be 250, 300 million. Otherwise, you just don't get the typical, the PIMCOs, the Fidelities, the typical large institution investors. So you need to work on a different set of investors, which again needs, requires a vision from the regulators and from the European Commission to incentivize those investors. Whether that means having the European Investment Fund investing in those investors through some funds of funds structure, exactly in the same way as they've done for the private debt market, or whether that means really, pushing pension funds and insurance companies to do that, giving them very light risk weighting in their assets in one case, or giving tax benefits in the other, or incentivizing retail, because retail obviously requires less liquidity. But in order for to incentivize retail, sometimes you have to have the local government giving tax breaks, which is exactly what we did in Italy. And then you have to have issuers. So I think, again, on the investors, a lot of work needs to be done, because it's a totally different set of investors, and you need active investors, obviously, not passive investors. It's a totally different set of investors compared to the ones that normally would invest in corporate bonds. The third one, obviously, is brokers. You need arrangers, advisors. You need investment banks. There's a funny Lex column today on the Financial Times commenting on the results of a large European bank, and the title is Extinction Rebellion, which means that a few European banks are desperately trying to avoid being extinct in their investment banking operations, because there's a huge problem with European investment banking, and it is a problem that has not been addressed by regulators, by the Commission, by government. The European investment banking industry is effectively disappearing. It's being taken over by large US banks, and large US banks only care about large issuers. So who's going to effectively arrange the small issue for the small company? And again, there's another thing that needs to be taken care of. So to sum it up, there's a problem with the ecosystem that, in my view, is totally overlooked also in the current capital market action plan, which has a number of very good initiatives with regard to rules and in regards to the functioning of the markets, which are all very helpful. But you can have the best set of rules, but if you don't have issuers, investors, and brokers, you don't have a market. So I think the time has come for industrial policy really to start addressing the issue of the ecosystem that is necessary for the corporate bond market to thrive, and for the European capital markets in general to frankly recover from the way they have been slowly shrinking over the past few years.
Thanks, Andrea. Very critical. I like that. You mentioned a lot of points: definition of SMEs, further simplification of procedures and prospectus, and also about the research coverage of SMEs. With that in mind, I would like to move to Florence. Florence, on your side, first of all, I would like to tell us a few things about firm funding and what you are doing with the platform. Also to tell us a bit, because the question is, do investors have the appetite or the risk appetite to invest in SMEs? So what do you see from your own perspective? And also whether the cross-border dimension that we want, if you want to build a union of capital markets, cross-border is fundamental. So do we have that in the market? Do you see it?
Hello, everyone. So yes, my name is Florence Vasilescu, and I launched in 2016 Firm Funding, which is a private placement digital marketplace to help small SMEs use private placement bond markets. When I say small SMEs, it's SMEs that are too small to go on the markets, even on the bond markets. They usually have revenues between 10 and 80 million euros, and they are looking for a financing between 1 and 10 to 15 million euro. And so Firm Funding is a platform that allows professional investors to be notified when a new bond offer is posted, and allows financial advisors to upload a bond financing need for their SMEs clients. And then the investor look at the financing proposal on the platform, and they can call directly the financial advisor to have more information and to have discussions, and then to see if they are going to invest or not. Today we have 250 professional investors registered. They are mostly asset managers, and there are also family offices. We financed 50 SMEs representing more than 300 million euros bonds issued in private placements. I launched Firm Funding because when I was working at the French Market Authority in the issuer department, I noticed that small SMEs had a difficult access to listed bond market. And when Euronext launched the initial bond offering, a lot of SMEs came with a project to list their bonds. But what I noticed is at the time is that smallest ones, so basically the SMEs looking for a bond size smaller than 10 million euros. For these companies, it was too complex, too long, and too expensive. And as I consider that it's very important that even small SMEs get used to bond financing, because as the other panelists, I consider that they should use all the financing tools available and not rely only on bank loans. That's why I launched this platform to facilitate, you know, the meeting between offer and demand. And I think private placement is a good first step for these companies to go on the bond market. In the light of the COVID crisis, I think, as Agnès said previously, that banks will have difficulties in the future to finance 100% of these SME needs. And so the bond market is obviously a good response to finance their growth. But and I think capital market union is key also for the bond private placement markets, because today we notice on the platform we have investors coming from France, coming from Spain, Italy, Benelux, Switzerland, and we also have some European SMEs coming to the platform. We finance an Italian SMEs, a Spanish SMEs, a Belgian SMEs, meaning that there is a need for harmonizing this market, because it will really help this market grow. Because today, you know, when you have an Italian company, it's not very easy for French asset managers to finance it, because you have these regulation differences that doesn't help. So I think to grow this market, if we have a clear, harmonized regulation, it would help. Then we also have a rating and a liquidity issue, as you mentioned. And if we want this market to grow, it's true that today you have no liquidity on the private placement market. But that's the first difficulty. Second one, it's not a real efficient market today, because it's still a deal by deal market, you know. The SMEs have no ratings, so that's not easy. They have to do analysis one by one. Also, the documentation is not harmonized, and you don't have a real efficient market in terms of coupon rates, you know, because it's not a real market. So it's really, I mean, on every deal we start from scratch. from every point of view. And I think that's not easy because today it's not a real market, and probably this kind of stuff would really help having this market grow faster. But yes, I mean, I can really say that there is appetite for this market. We notice it. I mean, we have over 3 billion euro available on the market. I mean, on the asset manager side, they are bigger. You have more and more asset managers that want to go in on this market. So there is definitely appetite for that. But I think all these different elements would help the market structure and obviously grow. Yeah.
Thanks a lot, Florence. Yeah, so I keep that for SMEs. I mean, if we talk about SMEs in line with the EU definition, issuance of bonds, of corporate bonds, is expensive. So that's a clear issue. But now I would like to, because we have also some questions are coming, I would like to go back to Agnès, whether you can, first of all, comment on what has been said from the other panelists, but also there is a question on how to attract or how to engage more institutional investors and about the prudential treatment of Solvency II regime for unrated bond investment by insurance companies. So when the Commission will start the Solvency II regime review, and also whether the amendments will be about private placement or equity investment only. So how to incentivize institutional also investors, apart retail investors. I mean, for retail investors, I mean, there is a recent study by AFME with the KPIs where they show that European households have significantly increased the proportion of savings in the form of deposits in the first half of 2020, which means less money channeled towards capital markets. So how we can incentivize investors, Agnès?
Thank you, and thank you everybody for all the interesting input and different views. On Solvency II, we have a review coming. It's going to be in the third quarter. The objective is to publish it in the third quarter 2021, and it is going to look at facilitating investment in long-term instruments. I know that the impact assessment is started, so I don't know what is going to be in the proposal in the end, because we are first assessing, looking at the impact, and then to have a solid analysis before deciding what we put in the legislative proposal. But this is clearly on the table. And also we are going to look at how to best implement, use the flexibility that we have in Basel III to support also long-term investment. So we're going to look at equity. I guess corporate bonds is going to be looked at as well, but I don't know what's going to be decided at the end of the day. We have to first do the analysis. SME definition came a few times. I understand it's a big problem. There are different definition of SME in different legislation, and not only the financial legislation. This is something that we are going to look at as part of the new CMU action plan. That's one of our actions. I heard the prospectus came a few times, so we've done some things. We could do more. We are going to look at it again. This is something, a commitment already. On market abuse regime, again, this is an action in the CMU action plan to look at it, whether we can simplify it further. Private placement, it's difficult for, we have done this study on the private placement. We do completely agree with you, Florence, that private placement are very important because they are a first step for companies to go to go and tap funding which is not bank funding and potentially could lead to corporate bond markets or equity markets. This is very much still in the hands of member states, in the national hands. So that is what we did, is to publish a couple of recommendations to the member states in 2019, but we could not go further at this stage. I heard that culture in capital markets, Maurizio talked about that, and financial literacy are important. We are having action also on the CMU action plan on this. That would be my my comment so far. Harmonize the point by Andrea that we need harmonized rules across the EU to avoid regulatory arbitrage. Yes, of course, we are very much in favor. We are pushing for this. Sometimes we have some resistance from one of the two co-legislators, I would say. But this is something, yes, we certainly want to avoid regulatory arbitrage. Tax incentive, yes, this was one of the recommendations we also published on private placement for the member states to consider tax incentive on private placement. But this is something, tax is something which is in the hands of national authorities, obviously. LTIFs, yes, this is also an action in the CMU action plan. We want to do more on LTIFs. We think that there is potential for this instrument to grow. The rules so far have been have been too strict. Otherwise, LTIFs would be more successful. Now, at the moment, they are not. So we are going to look at that. Also, one thing that was not mentioned is securitization. Because it is true that for I think, I don't remember if it was I think it was Florence who said or Andrea who said that big institutional investors are not interested in small corporate bonds because they are too small. They are looking for big tickets. One possibility would be to the securitization of many small assets like SME bonds, securitize them, pulling them together and selling them to institutional investors or others. So we also have an action on securitization there. I'm going to stop there, sorry.
Thanks, Agnès. I mean, I can see there's a long list of things, but I think I should ask my colleague Bea if we can see the outcome of the question that we posed. 44% simplify listing procedures and prospectus. So despite the latest, let's say, amendments on that, they are asking for even further simplification. And then we have incentivizing issuers and investors to come to the market. So that's the two important things. But I would like also to come back a bit probably to Mauricio, Andrea, and Florence, and raise a bit the issue about, there's a big discussion about sustainable finance, sustainable bonds, ESG bonds, green bonds. I guess for SMEs, this segment doesn't exist, or is it too expensive, this part of the market? And also how the development of sustainable finance will affect the access to capital markets for SMEs. Is it an opportunity for them or a risk of further discrimination with respect to large issuers? What are your intakes to that?
This is a perfect topic, probably too big to talk today about it in detail, but it's a perfect example of the market trend goes towards ESG issuance, and funds that are investing, they are under pressure from people that are putting money in those funds to invest in ESG. are SMEs taking advantage or playing an active role in that market? At the moment, I don't have this evidence. And is that too early to talk about it? In reality, from my point of view, this is the crucial time to talk about how to make the system working for them. The system that is right now built on in terms of, let's say, ECMA criteria plus the second opinion plus the prospectus plus the build-up of a bond for a conventional issuer is not viable. For an SME, it will absolutely not work. It's too expensive. I'm insisting on this point. Andrea is saying, look, why should I produce a prospectus? The question is, which prospectus and how big is this? And normally it's too big and too costly in terms of legal fees and so on. I mean, the listing procedure, why the MTF are all expanding in Europe, and I'm talking about exchange markets, because it's cheaper. I mean, the listing cost could go from 5,000 to 10,000 euro, and that's not the obstacle. And you will have the visibility of a public listing. So, an exchange publish the information, the prospectus, the visibility for the issuer, and so on. And we need to do more there. The problem is that, again, the legal cost, the transaction cost that is built, the rating cost, and so on. So all the pieces are important. Every single piece of the market ecosystem is important to have not a rule that fits all. Again, that was my criticism towards the MAR, but specific rules. ESG is exactly that. This is the time to talk about ESG that fits the small entities, because I'm sure people would be very worried. How can a small entity comply with all the requirements that are out there now, the criteria that are out there now, with the scrutiny of a second opinion done by a big entity and so on. So we need specialized entities that look at that and that can provide the right price for what they are doing, because there are small companies that are as worried and as ready to issue a green bond or a social bond, in a small version, maybe not a green bond, but maybe an objective linked bond, an SDG, so they improve their footprint, they improve their rating in terms of social inclusion and so on. So that discussion needs to be done now, and all the parties, they need to contribute it. That's something that, my final message is this one. We are the capital markets. We can't really say, oh, look, I need this. If I have a cheaper prospectus, everything will work. No, if the commission was giving us tax incentive, will work. No, it's every single part has to work. And the test will be if that 13–14% right now is their access to the capital market still after the first CMU in 2014, and now with the action plan, we are still roughly there. If that 13, 14, 15% of entities that go to a capital market goes close to 30, 45%, close to 50%, as it is now, and has been for some time in the US.
That would be ideal, actually. Andrea, do you share the same thoughts?
Yeah, totally. I'm a big fan of sustainability, but I think there's a huge risk that sustainability will become another reason for the SMEs not to go public, because I think that the discussion has been too much about a set of criteria that does not work for them. We published a research at Equita in conjunction with a think tank that deals with sustainability. We interviewed a bunch of listed companies, mid-caps, I wouldn't even call them SMEs. and we looked at how many of them had some sustainability rating from one of the providers. Well, 50% of the ones that had a rating from one of these providers, they don't even know that they had a rating from that provider. They had not been called. It was totally unrequested. And that, to be honest, Agnes, should be forbidden, because it is something that providers do entirely for their own benefit without having a discussion with the company. And that's point number one. Point number two, when we look at SMEs, we found that E and G more often are not hugely, positive in those SMEs, because obviously they tend to be family owned and possibly they're a manufacturing company. So maybe being totally carbon neutral is not their top thought. But what they contribute to their local territory is huge. What they do for their community is huge. And during the COVID, that was very clear. If the companies had not been very thoughtful and even aggressive in taking care of their people, I think the governments couldn't cope. So, it's a different set of parameters than looking for a large cap where obviously governance is paramount, and also being carbon neutral, where even oil companies today want to be carbon neutral, right? Looking at sustainability is something that is important, but we need to avoid this being one other factor for the companies not to access capital markets. I mean, at the end of the day, as also Maurizio was saying, we need, and this is what the European Commission will need to do in agreement with the governments, we need to create a marketing case for companies to expose themselves through some sort of access to capital markets. So if you issue a bond, if you publish research about your company, if you have a website, if you have an investor relation website, well, then your life should be simpler if you want to go back to those markets. And, which goes back to what I was saying about additional prospectuses. Your life should be simpler with regard to auditing. You should not have additional burden because you also have to report on how good you are in terms of sustainability. So because the capital markets have been shrinking for so long, and this has now become a matter of industrial policy, in my view, it has to be addressed as industrial policies, which a bunch of incentives, very market-friendly rules, and marketing. We have to make it great for companies to expose themselves because it's good for the system. We know, we have all the statistics about how successful companies have been in the US. Now in the US, we've seen private capital somewhat replacing public capital, but private capital still imposes a certain discipline on companies. So I'm sure that their ability to report their numbers is pretty similar to what they would have if they were public. But we have to create reasons for people to access the public capital markets, because those are the things that are really shrinking in Europe.
Florence, do you have views on that? Yeah,
I agree with what Andrea and Mauricio just said. I mean, in terms of small SMEs, obviously it's the same issue. They simply do not access green bond markets and sustainable markets. But I think it would be interesting, yes, to have a kind of a marketing tool, but quite simple, so that investors can quite quickly see if the SME has green or sustainable, impact. And I think they should automatically benefit from a lower coupon rate, for instance. Because to be frank, I mean, today we see on the platform we have some asset managers that only invest in green companies, that have, let's say, 50%, for instance, of their revenues that is dedicated to green stuff or sustainable way of doing revenues. But do they benefit from a lower rate? To be frank, I'm not sure. So I think we should do but something simple, to encourage companies to go greener, to go more sustainable, and so that they benefit from an easier access and probably lower rates on their bonds. I think that would help, and that would probably encourage them, and also it would be fair. So I think it could be interesting to see it also from the private placement point of view, even if it's necessarily simpler than all the green bond market stuff with auditing reports and so on, because obviously if you do that, small SMEs will not be able to access it.
Good. With almost 2 minutes left before closing this webinar, just a quick question. What would an industrial policy, let's say, be for capital markets? What is the thing to do to change capital markets? Maurizio, Andrea?
Again, as I said, a combination of many things, but in particular tax incentive, they normally push and help. An harmonized regulatory framework, we have to get it better there. The definition needs to be there, clearer and understandable. Incentive in terms of companies that are, getting into the market as arrangers and so on, just helping them is crucial. As Andrea was saying, if there are no good, the issuers are there, the investors are there. In my opinion, in many jurisdictions, the brokers or the arranging banks are not there, the mid-size, the small size. So policymakers should also look after them in terms of helping. Their work is vital, in my opinion.
Andrea?
I think there's two sides to it. One, I discussed at length, I won't repeat, it has to be about the ecosystem. And I honestly think that nothing got done to help brokers, investors, very, very little. So that needs to be a focus, and it needs to be a focus as if we were in the steel industry, something that needs to be fixed, something that needs to be helped. And state aid should be forgotten about, state aid rules. So, this has to become a matter of industrial policy, because the whole sector is disappearing. And the second thing is rules. And as I said, simplify, harmonize. I saw that there was a question about the recovery prospectus. That was, for instance, a good effort to try and do something about the prospectus to simply be simplified in this context, but it didn't go where it was supposed to go. It started very well, and then it ended up being something that didn't really simplify much. And again, I go back to my question, why a company that is listed on a regulated market and has to be transparent about everything, even about sustainability, needs to file a prospectus. So I think on the rules and on the, doing something for the ecosystem, the time has come for the Commission to be bold and really look at things in a totally different perspective, in the context of a whole industry that needs a lot of fixing and a lot of help.
Lawrence?
Well, I mean, from the private placement perspective, I think it's already a simple market. We have to state it. I mean, it's simple to issue a bond under the private placement system. So I think that's a very good point. Second good point, it's accessible for companies willing to issue even a bond for €1 million. So that's very positive. Clearly, I mean, the harmonization of the market would help it grow, but also I think doing some marketing around it, because very few small SMEs know they can access this private placement market. When I had the opportunity to talk to some SME CEO, what I see is that most of them, they don't even know it exists. And when they know it exists, they think it's not accessible for them. And I think this is simple, but that would be very, very useful if we could help them know that it exists, and yes, it's for them too. Because most of them, I think, don't even try to go on this market because they think they cannot, but actually they can. So probably one simple thing to do would be to let them know that yes, they can.
And yes, last word to you.
Thank you. Maybe reacting on, I would make two small points, which are more general. That lots of very interesting things have been said. Lots of things should be done, and capital markets is a long-term project. There are lots of small steps to be taken that we have been starting in 2015. There are on many issues. Prospectus came several times. We are taking small steps. We need to take more. We will take more. On other issues, it's the same. We didn't talk about insolvency, which is a huge issue for capital markets in Europe, a very difficult one. We took a first step. We are taking a second step. Now there will be a third step. Capital markets union is a long-term project. At the same time, there are two emergencies. First one is that we have a problem of funding, and we have a COVID crisis, which is which is going to put lots of companies in a very difficult situation in terms of funding. So we need to get funding to them, and we need to do this urgently. And at the same time, we have to do things right, because we are looking at an objective which is maybe 20 years ahead, and we have to make sure that we still have the financial stability. We still have to make sure we have the investor protection, and member states and European Parliament are very concerned about investor protection. So this is to say that we have to progress step by step. We have to be ambitious. That's very clear. I think in the first CMU action plan, we were ambitious on a few actions. On a couple of them, we were a bit our ambition was a bit cut. So sometimes from the private sector, you may think that we had to shy with some of our proposals. So we are also trying to be realistic, having been burnt a couple of times, and trying to achieve what we think is achievable. So that is what I wanted to say. In terms of visibility, marketing, to be able to attract investors, we didn't talk about one action which I think is important also, which is really brand new. It's making the companies visible across EU by creating a single access point on information. This is more to create an integrated market. And with this, I will give you back the floor, Apostolos. Thank you very much again for holding this webinar.
Thanks, Agnes. If I sum up, I like the last thing that you talk about ambition. So I'll keep that the Commission should be even more ambitious than it was. And the other two things are costs. We should cut out costs, so make it more feasible, less expensive for SMEs to go to the public markets, whether this is simplifying rules, less complexity, and so on. And the second one, or even should be the first, is the definition. If we don't sort out, everyone agrees that the definition should be modified, should be changed. So if we don't do that first, then everything else that comes is like building a castle on a sand. So if we don't start from the fundamentals, then nothing will be right. But with this, I mean, we're already 5 minutes past the time. I would like to thank a lot Agnes, Maurizio, Andrea, and Florence for this very interesting discussion. I would like to thank also the people that participated, the audience. And we'll keep you posted on that. Will be a review, an event report actually, that will try to summarize the discussion that we had today. So this will expect to come within the next 2 weeks. And of course, looking forward for the third webinar, which will come on this series of SMEs financing. So thanks a lot. Thanks everyone, and see you.
Thank you.
Thank you. Bye-bye.
Bye.
Thank you very much. Goodbye.
Bye-bye.
Bye.